What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Thursday, May 30th. All right, guys, Nvidia stock here today up $9.24 per share. That's plus 0.81% in regular trading hours. Let's zoom out a little bit here. We held yesterday's move, which is a very good thing to see. Now, a lot of times when you get moves, we're just going to peek at the 30-minute quickly just to show, sneak peek here, just to show yesterday's move. We held it, and honestly, guys, a lot of times what you'll see on big moves like that is a lot of times traders or institutions, funds, they're not ready for that. And they get skittish. And a lot of times people bail. So holding a move like that is very important to see. And we held it today with a little bit of a cherry on top, just under a 1% day. Listen, it is down actually. We're looking at about a 12% downside move. 12-point downside move. 12% would be a train wreck. In the after hours, it's very low volume. Likely the reason we're seeing this is a couple of things. First of all, we're seeing a market-wide little bit of a fade after hours in most stocks ETFs, or at least a lot of them. We're seeing UiPath is bringing in a new CEO, and that tends to show insecurity in the current state of the company. Stock's down. Last time I checked, it was down like 30% after hours. It's tremendous. It's a train wreck. And then Salesforce. We'll just pull up Path here for a second, just so you can look. Salesforce is also disappointing guidance here today. So Salesforce is also taking a beating here today. So nothing really business specific as far as Nvidia is concerned. So when it gets tugged down like that, that's fine. But if you consider after hours, it did give back all of today's move and a little bit more, but very low volume. Take that with a grain of salt. Listen, let's get as good of a feel as we possibly can for Nvidia heading into tomorrow. We're going to do a quick analysis, just fast, on the volume profile, try to pull out directional bias. We'll look at the self-fulfilling prophecy psychological levels. Listen, guys, a lot of money is paying attention to those and making trading decisions around those levels. So we need to be aware of them as well. We'll look at implied volatility, which is very important if you're trading options, the expected move for tomorrow, and the directional bias coming out of the chain for tomorrow. So let's get started here with that volume profile analysis on the 5-minute chart. Listen, guys, if you're new here, by the way, first of all, welcome. Great to have you. Second of all, NVIDIA is a daily upload, so I hope to see you subscribe to the channel, and I will keep the NVIDIA videos coming. So now, if we take a look under the hood here on NVIDIA, off the open, guys, we saw a contextual high-volume open back to normal compared to what we saw yesterday. Okay, so that's very contextual. It fades. We hold on in terms of red volume for a second bar here, the third bar of the day, really. That's a little bit out of the ordinary. I mean, a lot of times what we'll see is like a stair step down very quickly off the open in terms of volume, but it's only 2 bars. I'm typically looking for at least 4 or 5. So if anything, that's like 5% bearish bias, just about the lowest I'll ever assign. Moving through the day, we get a few green pops, but they're seemingly kind of random and they're too risky to really assign anything to. So as we move through the day, we get some more pops. Again, too risky. Pop here. Listen, I'd love to assign something there, but if I don't remain unbiased, what are we really doing? I can't assign anything. There's too much of a risk of fooled by randomness, and if we were going to assign, we would, to these random outliers, single bar outliers, we'd be here all day. We'd learn almost nothing. And we get a little bit of a pyramid here, but it's relatively equal on both sides, kind of cancels each other out, fades, and then into the close, very normal. This big red bar here, guys, that's a rebalancing bar. You'll notice that the actual movement on the bar is not large at all. It's just a lot of buying and selling going on by algorithms after the closing bell. All right, so listen, bulls, it would have been great to see a whole bunch of bullish bias, at least a little bit, on the day holding this move. But in truth, there's very little bias at all, which is kind of interesting in and of itself. But in terms of what we've seen as far as volatility is concerned lately on Nvidia, a 0.8% day is not a large day. And, given yesterday's move, I'm actually a little surprised we didn't see more bearish bias off the open, as you saw perhaps some profit taking right off the open. But the bulls actually propped it up in a pretty impressive way. Though bulls, again, would have been good to see some bullish bias. We just didn't get any here today. Now, if we look at let's just quickly look at the after hours. Again, you can see very, very low volume. One outlier here. Too much of a risk of fooled by randomness, right? You can see the giant wick on that bar. Just a lot of volatility on that bar. Likely algorithmically driven. So I'll tell you what, let's move on to something much simpler to follow and very, very effective. The self-fulfilling prophecy psychological levels on the 30-minute, the 4-hour, the daily. Some of the most popular charts you can look at with the 50 period, the white line, and the gray line, which is the 200 period. Also, heavily watched indicators. That's the reason we're looking at them. Now, you guys remember yesterday's video, if you caught it, we were pulling away from that 50 period, ripping it upside. That can cause a problem, because if you come in and test it aggressively while it's ripping upside aggressively still, sometimes that can open up an opportunity for bears to rip down through and claim it as resistance. We tested it hard off the open. It wasn't perfect. It was a little sloppy. We got a wick down through. But bulls, you guys held that level on the 30-minute here today. I would say that's something to be relatively proud of, given, you know, how that test off the open was not the least aggressive thing we've ever seen, right? We held it, and we closed not tremendously far above the level, but we closed above the level. Now, in the after hours, we faded beneath the level. Listen, reclaims and giving up levels in the after hours especially, I tend to look past, unless we're seeing some kind of business-specific news event, because volume is so low, right? So I'm kind of more interested in where we closed. But, of course, after hours, it is the real price. So now, looking ahead to tomorrow, bears, if you guys could finally pull off a downside break of that 50 period, right, and actually claim that as resistance like you tried to do off the open this morning, that would be a big win, right? Test it and reject hard on big volume downside. That could open you guys up for a downside test, at least in the near term, of maybe $1,100 is kind of that next level. All right, that's good for you guys. Bulls, I want to continue to see the 50 period being utilized as an ascending support, which means bounce off that level. All right, I don't really care what volume we tested on unless we have to come from beneath. If we end up opening beneath the 50, I want to rip through on high volume, retest on low, and then bounce from the 50 on higher volume. If we open above the level, I don't really care what volume we tested on as long as we bounce on higher or at least above average volume. And the reason I always say that, guys, is because it's a sample size thing. Right, I want as few individuals betting against me as possible, which is why the low volume retest, and as many people agreeing with me, the volume pours back in as it bounces as possible. All right, so that's what I'm looking at on the 30-minute here tomorrow. Let's look at the 4-hour. You can see, guys, we are still far away from that 50 period, 11.7% on the 4-hour chart. So I'm not paying tremendous attention to it. The only thing I'm looking at is this 50 period. If you're a bull, you want to see that continuing to ascend at as aggressive of a rate as possible. Remember yesterday we talked about, hey, if we can get that 50 period above $1,000 a share, that'd be a good thing to see. Well, it's above $1,000 a share. Okay, so continuing upside is really all I'm looking for. If you're a bull, it's good to see that because it's getting some more feet, like some additional backup in terms of psychological potential support, higher and higher, and getting closer to the actual stock price. Now, the daily, the most important chart of all. Let's take a look. Now, guys, the daily is all about psychological levels when you're this far away from, well, in general it is, right? But especially when we're this far away from something like the 50-day, it's all psychological levels. So, we're currently kind of in a channel. We've upgraded our channel from, 900 to 1,000, then to 1,000 to 1,100, and now recently from 11 to 12. We're stair-stepping. It's happening quick, but we're stair-stepping. Right, in short bursts, that's great. But, bulls, if we test $1,100, you want to see that hold. Big time. Okay, that's a great area to hold. The goal, if you're a bull, is really, getting above 1,200, guys. You have to understand that the more $100 increments that we can reclaim, not that we can expect to reclaim 50 of them, right? But if we can reclaim a few of them at least, before the split, those all of a sudden become $10 increments, which are also psychological levels, and they're still just as relevant after the split. So if we can get above $1,200 a share and hold 12 as support, creating a new channel of 12 to 13, that's great, because now we have 1,200 and 1,100 ahead of 1,000, which will become 100. So, but there's something in the way. It's 1,150. Every $50 increment is a smaller psychological level inside of each $100 channel. So bulls, downside test of 11, hold it. If we can get above 1,150 and hold that as support, we can look to use that as kind of a trampoline to make an upside near-term test of $1,200, which is ultimately the goal. Bears, number one priority, do not give up $1,200. If you can hold off 1,150 and use that as resistance, beautiful, because that could give you the power and the strength you need to take this downside back below $1,100 a share, which is your goal here if you're a bear, at least in the short term. Now, implied volatility. Let's take a look. Up again here today. So now compared to the last week, we are in, we're looking at the last 7 days, right? Or the last week's worth of trading days at least. We're in the higher range, I would say. Okay, because most of the last week we've spent quite a bit lower than we currently are. In comparison to the last month, I would say we're approximately in the mid to lower range. The reason I say lower range is because what makes this the mid is this big dip, but it's been so short-lived, right? Like the majority of that time frame was spent higher than where we currently are. Okay, and in comparison to the last 3 months, we're kind of back in the mid-range now, or at least getting there. All right, important to understand where IV lies, especially if you're trading options, guys. Vega value, do not overlook it. I know all you guys pay attention to Delta and Theta, but man, Vega is the most overlooked and one of the most important Greeks by far. It can make you a lot more money, or it can crush you without you even realizing it. Now let's take a look at the expected move here on Nvidia. So here's how we do this. Wednesdays are a little bit different. We have the expected move by Friday, the close on Friday, compared to today's close of plus or minus $36.42 per share. Here's what we do on Wednesdays. By the way, this is all going to be compared to today's close, not including the after hours movement, because the options market, of course, closed before that occurred. So we divide that 36.42 by 2, that's Thursday and Friday, because we're trying to get tomorrow, right? And then we add back 50%. That gives us $27.32. $27.32 a share of kind of the one standard deviation volatility range. But on Wednesdays, we only have 2 trading days left, Thursday and Friday. So I like to shave a little bit off because adding back 50% is a little bit heavy when there's only 2 trading days left. Because the reason we do that is to make up for the fact that just dividing by the amount of trading days left assumes all green days are all red days. So we have to add back a little bit of volatility. In this market, I'm adding back 50%. But on Wednesday nights, heading into Thursdays, assuming the market's also open on that Friday, I like to shave a little off. So we have 27.32. I'm going to shave that and say, okay, it seems like the market is pricing in an expected move on Nvidia of approximately plus or minus $20 to $25 a share. And again, if you disagree with that, you think it's going to be less, you think it's going to be more, that's actually a good thing. You kind of want to disagree with that because if you couple that with a directional bias, that's a potential position for you, right? I mean, really, what is a position? Why do we take positions? It's because we kind of disagree with the current thought process of the market. That's really all it is, right? So if you agree with the market exactly, well, then you wouldn't really be buying stock because you agree with the pricing of it. If you agree with the market's outlook on volatility bias, it's kind of hard to justify taking an options position because you don't really have an angle on Vega. You always want to have an angle on Vega. But you might be thinking, what about directional bias? And we have volume here. Let's take a look. 1.62 million total contracts traded today on Nvidia. 1.01 million were calls and 607,000 were puts. So that's a pretty heavy call side bias on the overall call per ratio here on Nvidia today. And if we take a look at the short-term speculators, that's going to be the 0 to 20 delta range here. We have 335,000 calls and 328,000 puts. So it actually a lot more undecided out of the short-term speculators compared to the overall call put ratio, which tells us that a lot of these calls are being priced in at the higher delta ranges, more like the at the money and in the money contracts, which are more like the mid to longer term outlooks. Guys, if you want to get my daily scalp setup alerts, my in-play stock alerts, my human verified unusual options activity, that's how I've been tracking that for years. That's how I keep track of what the whales are doing. You can get grandfathered in at the current rate using that link in the pinned comment. I'll see you inside of our private community, which is of course where that all happens. And hey, if you appreciate the daily Nvidia analysis, please leave a like on the video, helps out tremendously. It's the best thing you can do for the channel. And then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.